Okay, so that marks the end. Holy cow, someone played with my stereo. Okay, that marks the end of our time for note taking. So I'm going to come up and I want you to, I need a business person today, just like we've had business people in the past. So who would be willing to be my business person? I've got, who said me? Yeah, I don't think I've ever had Francisco be our business person. I would love
Which
to.
one?
Francisco M. Frankie M, yes. Sorry, I'm just looking for my money so I can give you some money. Okay, Frankie, pick a business in your mind. Come up here. You got to come up into the hot seat. You got to sit in my hot seat. Okay. So Frankie, what's your business? Foot Locker. You own cool shoes. Okay. Frankie, how much money did you make last quarter? Do you know? No, you don't know? Oh, okay. Do you know how much, do you know if you owe a lot of money to people who you have liabilities to? Like how many liabilities do you have? 3. Who are they to?
Adidas.
You owe your competitor? What's a liability? Let's help Frankie remember what a liability is, guys. What's a liability? Something you owe to who? Could be, who would we owe? Someone who cleans your shop, so if you had a contract with a cleaner. Someone who produces, so if you're buying products or services from somebody, who else do we always owe? What liabilities have we been talking a lot about in the last couple of chapters? Who do they go to? The government, so that's another liability you can have. Okay, so how do you know, Frankie, if you made enough money this term? Like, do you know if you're profitable? Did you make enough money this quarter to pay all your liabilities? Pay all your people? Probably, but you don't know, right? Okay, let's pretend for a second. I'm going to give Frankie one of these income statements. It's a cheat sheet, that's right. I'm going to give you a little income statement, Frankie, and now you're going to look at it and tell me if you think you can tell how much money did you make. Where are you going to find that on this balanced income statement? On your net income. Ooh, did you guys hear that? He's like, I'm going to know how much money I made on my net income line. So he's looking on his net income line to see. I'm trying to get up our example so you guys can see. It shows everything you paid for. Okay. So on this one that we have up at the board, we have our total income here. We have different amounts of income. We have our costs for construction. What does income, what is the financial equation for income? How do we configure net income? What's the equation? Sales minus expenses. Okay, that's close, Spencer. Very close. So net income is equal to what? Sales has another term for it. What is it? Revenue. That's the big category. Revenue minus all of our expenses. That's how we know if we are what? If we're making money, then we are profitable, right? Okay, so we can't tell if Frankie's business, his Foot Locker franchise, is profitable until he has his income statement sheet done. So all the worksheets we've been preparing for the last chapter were to help us to make these financial statements, because we don't know these numbers until we do these financial statements. So I just wanted to clarify that in case you guys weren't understanding why we make a financial statement. Because Frankie can't tell if his business is profitable until he has the financial statement in front of him and he can do some analysis. The analysis we're going to look at is what makes it profitable. And these are some of the questions that are on your reading guide. Like, for example, how is the cost of merchandise or goods sold calculated? That's something that we're going to find on our income statement, because our expenses, what eats into our revenue? Revenue has a couple categories. Let's go back. Okay, revenue. What goes into this revenue category? Sales. What else? Accounts receivable. Is accounts receivable an asset account or a revenue account? Accounts receivable is an asset account, which is going to go on the balance sheet. So we have two sheets that are going to, every account is going to be connected to one of the two sheets. The income statement connects to every account that has to do with revenue and expenses. So those would be accounts like, I'm going to give you guys these workbooks because they're going to kind of help a little bit. I know it looks a lot more intimidating than it really is, because half the pages are just for you to refer to, not to really do anything with. Because the worksheet's already done. We like it when the worksheet's already done, because that's the hard part.
So we're not playing much.
Okay, so let's look at this. We know on our worksheet we had two parts. You can go back to your seat for a second, Francisco. I have more questions for you. I'll pull you back up, okay? Okay, we have our balance sheet accounts, which went from cash to what on our list? What was the dividing account that changed from balance sheet to net income? Income summary. Thank you, Mackenzie. Okay, what is the equation for our balance sheet? What equation shows if our assets and our liabilities are in balance? Just gave it away. What is the general accounting equation? Assets equal liabilities and stockholders' equity. Okay, stockholders' equity. Okay. So when we have cash, what goes into the assets? We have a cash fund. We have a petty cash fund. Right? All these accounts receivable, that's our assets. Allowance for uncollectible accounts. That's a contra asset account to our accounts receivable, right? Then we have our merchandise. Any merchandise in our store is an asset. Then we have our supplies. Any supplies we have in the office and the store are things that we can use to help create more business, to help create more money. Then we also have our prepaid insurance. That's an asset until we use it up. Then we also have equipment. This is all pretty familiar, right? Do we need to go through the whole thing to get all these accounts? Okay. You guys get the idea. I'm just reading down my worksheet, dividing it into assets, liabilities, stockholders' equity. When I get to the income summary, like Mackenzie said, I'm suddenly talking about my income statement instead of my balance sheet. So on income summary, what's part of the revenue? We have sales. What takes away from sales? Any sales discounts that we have. What else takes away from sales? What would lessen the amount of sales that we did? What happens if you sell something and someone brings it back? Yes. So So this is a contra account to the sales account. And then another part of revenue is our purchases and our advertising expenses, and if we went cash over or cash short. So all of these other items are things that we need to keep a track of in order to analyze our financial state, our financial wellness. So looking at our worksheet really helps us to kind of get the first glimpse of how we're doing as a company overall. And we're going to look some more about how we can analyze these spreadsheets going forward. But before we can analyze a spreadsheet, we have to make an actual income statement that looks like this. So today in our workbook, our first workbook lesson, we're going to do 15-1 on page 454. Thank you, Sarah. We're going to prepare an income statement. So our income statement is totally dependent on the worksheet, which is why we did the worksheets last time. So I'm going to put aside our example for a minute, so we can look at just the accounts in our income statement. I want you on the back of your notes guide to list the steps for creating an income statement on your notes, because it's not included in the notes. These questions will help you as you try to answer the true, false, or the multiple choice. And we'll talk about some of those questions as we go. So maybe now that you've read them over, you can kind of listen for what's important about those. But first off, we have to know how we have to first do our revenue section on our balance statement. So if I was going to write some notes for myself, I would look on page 449, where they're telling me how to do the revenue section of the income statement. And I might even draw up a sample for myself on the back of my notes. So I'll let you guys do that on your own. I'm just telling you now, you'll want to write up a sample revenue statement or income statement and a sample balance sheet on your notes. And it's not included, I'm sorry, the chapter was kind of weird. But for today, we're going to practice doing it together in the work together. And once we do it in the work together, I think it'll be easier for you guys to do those notes on your own. So first off, we're just going to prepare the revenue section and the header. So our company in this example is called, who can find the name of the company on page 454? Interstate Tires. So we're a tire company today. Okay. And I'm going to tell you guys, your test literally looks just like this. It's a blank sheet. That's the test. So what we're doing is the test. You've got to memorize each of these accounts. So when we do it together, make sure you have it listed accurately, and you're going to memorize or come up. I'm going to challenge you guys to come up with some creative ways to remember the list of the accounts in the right order. So remember my song for the Post-it song? Something like either the Post-it song, or you can create a poem or whatever. But right now, not right now. We're going to go through it all, and then I'll give you guys some time to kind of figure that out. Okay, so first we're doing the company name, then we're going to write income statement, because that's the sheet that we're working on. Yes, we do. Thank you. And then we're going to write for the year, or for year ended, not the... And they do financial statements on a yearly basis at the minimum. Most companies will do it every quarter as well, especially big companies. This company might be small enough that they can get away with just doing it once a year. So they're doing their balance sheet statement. A balance, or the income statement, is just a snapshot in time. It just shows a period, a time period. It's for the entire year. So it's showing the changes from the beginning to the end of the year, how it worked out. So the first thing we're going to do is we're going to skip, see how this first row does not have any columns in it? Make sure you write on the second row where there's columns. You're going to write revenue with a colon. Then we're going to indent, and the first revenue account is sales. Then we will less the sales discount. So make sure you're indenting. And then we're also going to less, so keep your indent and go underneath the last sales, the sales, returns, and allowances. You can just abbreviate allowances or just returns RET, period. And allowances, allow with a period. Okay, so now that we have our first, then after that we'll have our net sales right here. The whole point is to figure out what our net sales is in this revenue section. Okay, so let's look at our balance sheet on workbook 1. So if I look on the very first page of my workbook, actually no, I want the second page because we're talking about the income statement. So on page 398 of my workbook, I can see that I can see my sales. Who can find our sales account? What's the amount we're going to write into our sales account? 548,000, right? Okay. So this number from my workbook, I'm going to write in the third column of our balance sheet. We're basically, this whole sheet is going to be like one really big addition and subtraction problem. I know, I'm trying to reduce the volume. Somebody played with my volume today and I was not very happy with that person. No, it was another student. Okay, so we've got our sales amount in there. Then we've got to find our sales discount. What amount is the sales discount?
Why are you writing in the third column?
Because we're going to, I'll explain it as we go, but basically we have a main number and then we're going to kind of move over to do some side problems, and each of the numbers in the columns will be added together in the right place. So you'll see how it works at the end, but in the way, just trust me on why we're putting it in a certain column. In the end it will all make sense. For now, just put it in the right spot. Okay, so what was our sales discount amount? $661. Okay, I'm not going to write it underneath my sales amount. I'm going to go to the second column and write it in the second column. Because this is one of those things, because I'm subtracting it, I'm going to do a different, I'm going to come up with a subtotal to subtract from that. Then I'm going to also write the sales return and allowances account, which was right underneath it, was $3,512.84. So now it's making sense why our worksheet is organized the way it is, because it makes it really easy for us to put those numbers in. Okay, does everybody have their ruler today? Go get a ruler really fast. We need rulers today. Yeah. Okay, so when we got our two numbers in there, we're going to rule underneath the two numbers that we want to add together. So both of these less amounts are going to be subtracted from the sales amount to get our net sales, right? We already know that. So we're going to add these two numbers. And then write the new number underneath our bigger number. Okay, so we're going to take 661, 69, and add $3,512.84.
Are you recording yourself today?
84 cents. Okay. So the total is $4,174.53. We're going to put that amount right underneath the first sales amount we wrote. Does everyone understand how I got this number? Okay. Did you guys get the same number when we did it? No? You did?
I did.
Okay. Yeah, that's what I got. Okay. Now, to get our net sales, we know the easy amount. Now that we had our two deductions that are going to come out of our sales, we're just going to take this number and subtract this number. And we're going to write it in a different spot. Instead of writing it underneath like we would in a regular math problem, we're going to move over to the side. This is a number that we're going to save for later. So we're going to take $548,989.25 and subtract $4,174.53 to get $544,000, which we're going to put in the fourth column. And this is our net sales. If you notice, in this little column right here, they ask for a percentage of net sales. So this is going to become, what percentage is net sales of net sales? 100, exactly. We're going to put 100 right there. 100.0. This will be our 100% that we're going to compare all the other figures that we do as we go along. Okay, everyone say high five. We just did the revenue section. Woo, woo. Okay, next we have the cost of merchandise sold section. So we're going to write right here. Cost of merchandise sold. Oh my gosh. No, I want to go turn down my mic again. Okay, what accounts do you think are going to go into our cost of merchandise sold account? You guys look at your balance sheet and try to tell me what you think is going to go in there. I almost said a swear word, but I didn't. Sheet. I had a French teacher who once said, "Get out your worksheet," and because she had like a really funny French accent, and she tried really hard. She was actually French, and she was like, "No, not that. A worksheet, because it was really hard for her to say the E sound. She would always come out the I sound. Okay, what accounts go in our cost of merchandise sold account?
Merchandise.
Merchandise. So anything related to our merchandises, right? Cost of merchandise sold. So I'm going to look on my
So it's supply outputs.
anything that has to do with inventory, merchandise.
Everything this is merchandise.
So maybe
Purchases.
purchases. Isn't that what we got? What we buy?
Purchases.
So our purchases discount, our purchases return allowances. So before,
Yeah.
lots of purchases. Okay. It also in our book tells us a hint. It says, oh wait, not yet. We've got to figure out what our beginning balance of our merchandise account was. So let's look on the balance sheet, because where are we going to find the information on how much inventory we had when the year started? What account is that going to be in?
Purchases.
No, that's how much we bought. What account do we find the inventory that we had when the year started? What's that account called? Merchandise inventory, high five Spencer. Okay, merchandise inventory. So I'm looking on my balance sheet. I see that's 198,000. Now I also made an adjustment. I made an adjustment to this account. Why did I make an adjustment to this account?
Where do you get the inventory from? Oh, found it.
Okay, it's on the first page. What did that adjustment, what was that adjustment for? Do you guys remember? It's for what was used up or lost or something over the year. It's for the difference between where we were and where we ended, right? So this is my beginning balance of my merchandise inventory beginning balance. This is my merchandise inventory ending balance. This was at the beginning of the year on January 1st. This was at the end of the year on December 31st. Does that make sense?
Yeah.
Okay. So now we're going to first write our merchandise inventory balance. We have to state where we started. So indent, and then write merchandise inventory. And you're going to put comma January 1. So that you know this is your beginning inventory balance. Then we're going to write which of those two numbers again? Which of these two numbers am I going to put on this column?
The beginning of the year.
The beginning of the year, 198. The 198 number. I'm going to put it in the fourth column, just like we did with the sales.
The high school inventory is like short term.
INV period.
I'm gonna hate switching back and forth.
I know. If you guys want, you can rip them apart. That makes your life easier.
It does.
Okay. So we've got our merchandise inventory account here. Next, what did you guys say was going to go in this? You said this account is for sure going to go in here.
Right.
Purchases. Very nice. So now we're going to figure out all the information for our purchases. So we're going to write purchases here.
Yeah, are we using the same chart for
No, we use a different chart for the on-row. Okay, so our purchases. Where's our purchase account?
on the other side?
Oh, it's on the other side. Okay, purchases. Here we go. And they're both the same number, so we don't have any confusion. We're going to put our purchases in the second column. Wait, hold on. Let me check that. Yes. We're going to put our purchases amount in the second column. So that's 278,452.39.
So it's merchandise inventory in the third or the fourth?
This is in the third.
You said third.
Sorry, I said fourth. I meant the third. 1, 2. Actually, it is the fourth column. 1, 2, 3, 4. No, look, if you count. 1, 2, 3, 4. That's the third column.
He
But if
actually
you-
meant the columns of, we actually write the amounts. These columns, where we actually write the amount. The numbers.
1, 2, 3.
Yeah,
Like that's the third column.
that's what.
Okay. This is the third column. Okay.
Is it just because you're getting dark outside?
I know, it just got dark. Okay, then we're going to, what takes away from our purchases account? What's
Discount.
gonna make it less? The purchases discount, so we're gonna write less. Purchases, discount. And then what else takes away from our purchases account?
Purchases.
Very nice. Yes, you gotta indent both of them. So notice how my S's are aligned and my P's are aligned inside of my descriptions. Okay, my purchases discount is going to go in the very first number column, 1,845.78.
Yeah.
Okay. It will all make sense as to why, I promise. So we've taken 3 steps down. So we had 2 steps on this one, and we're doing 3 steps for merchandise sold. Can you guys guess what we're gonna do with these two numbers?
Adam.
We're gonna add them. What do we do when we add? We get out our trusty ruler. We're gonna rule over. Okay. Yeah, we will. We'll get there. First, we're gonna add these. And we're going to put the total right next to it, right?
Yeah. Sure. My ruler right here.
Okay. What did you guys get?
Same thing you got.
Cool. Okay, we're all on the same page. Next, we're going to do the net purchases, just like you said. We've got our net purchases. So now, where do I write my net purchases?
Under the purchase of whatever.
Under where?
Okay,
Which
purchases.
column?
The first one. Oh, last one.
1, 2, 3, or 4?
Four.
Third. Very good, Lydia. Why do we want the third one?
Because, no, I was just calling the.
You're just you're just following. Okay. So first, we're going to
Subtract.
add up these two. Or do we add these two numbers, or do we subtract them? We subtract them. So let's subtract those two numbers, and we're going to put it here in the fourth column. Okay. Did you guys get that number?
Yeah.
Okay, perfect.
Nope. Yeah.
Okay, next, after our net purchases, once we get our net purchases, we can figure out our cost of goods available for sale based on one other thing. So now we're going to do the same thing we did with our sales, and we're going to, this number, when we take our merchandise that we started with, and we subtract or add all the purchases that we did to it, then we'll have all the goods that we had available for sale. So this column is, this next one is called the total cost of merchandise, and you can abbreviate merch, available, I just leave it like that, available for sale. Or if you really want to make it short, total cost of goods available for sale. Togas.
Togas.
Tacogas or something like that. Tacogas. Total cost of goods available for sale.
That.
Kind of. Okay.
But you just can write the.
You can, I would try to write out this just so you remember it for now, but you could write the abbreviation to the side. I would know both.
Wait, what does it say?
Total cost of merchandise available for sale.
Wait, where's the M on that?
M?
On the whatever.
Oh.
You need the M. Because
Because G makes no sense.
Oh, I learned total cost of goods available for sale. Merchandise and goods can be
Yes.
replaced.
Yes.
TCO gas.
TC, yeah.
TCO gas.
So TC, that's my abbreviation for total cost of goods available for sale. You could, if it was if it was an abbreviation of this, I guess technically it would be TCONAS. Colness, something like that. Okay. Now what are we gonna do with these two numbers? What are we doing with our merchandise and to find this number?
Adam?
We have a beginning inventory. We made purchases. Is that going to increase our total cost of goods available for sale or decrease it?
Increase.
If we have inventory and we buy a lot of stuff, now we have more stuff. Okay? So we're running, that's the more stuff, that's the most amount of stuff we had all year. So we're going to take that number and add,
Percentage next to the next set.
not yet, not yet. We'll get there. Don't worry. We're adding them right now. This number is not going to go to the side in the fourth column like you would expect. This one goes below. It's because we have more to go into this category first.
I got you.
Oh, I I got 29 too, I just wrote 28, sorry. Okay,
Don't even dare tell me.
next we have to do what? We have our beginning inventory. We have all this goods available for sale, but we have what? We have a discrepancy, right? Because do we have $471,000 worth of stuff in our store? No, because we've done what? We've sold it, right? We sold it. So we're gonna now less our ending inventory. So we're lessing the merchandise inventory from December 31st. On my worksheet, I can see that my ending inventory was 188. 188,000. And I'm going to write that number right underneath it. I found it right here.
No, I meant like which column you're writing here.
I'm writing it in the third column still. We're just going straight down now. So we did 3 steps over, 1 step back, and 3 steps down. We're going straight down now. Okay, the next step is we're now ready to do our final amount of the cost of the merchandise we sold. We want to know how much we sold. So this whole equation has been to help us realize how much we actually sold. So we're going to write the amount, cost of merchandise sold.
That's for both of them? So, or is that just for merchandise?
That's for everything we've bought to resell. So all the merchandise we've had in our store, we want to know how many pairs of shoes have we actually sold and how much was that worth, right?
Yeah, like $100 for each shoe.
Well, we're going to figure it out. So to get this amount, I have my total cost of goods available for sale. Am I going to add or subtract this inventory from it?
Add,
What does this word say?
less. Okay.
So we're subtracting. We're taking this number, we're lessing this number. So I'm going to subtract 188,999 to 25. This number is going to go in the very last column. $282,539.04. Is that what you guys got? Okay.
Oh gosh.
It's going to go in the 4th column. Now, do we know how much money we made? We're so close, look. What does this look like? Revenue, expenses. We're still there, right? Almost. We're almost there. Revenue, and this is part of the expenses. All this cost of merchandise sold comes out. So we're going to figure out the gross profit on sales. That is the next line, and this one is not indented. What do you think this number comes from? The net sales add or subtract from the cost of merchandise sold? Divide. Try again. We will do that in 1 second. Okay. The profit is this minus this. We're going to subtract it. So we're going to take $544,814.72. We're going to subtract the cost of merchandise sold. $282,539.04. $262,275.68. Any number that we put in this 4th column are the numbers that we need to get a percentage of net sales from. So we want to know how much of this number was our net sales. So I'm going to just, because it's already in my calculator, I'm just going to divide it quickly by the other net sales, our 100%, to get 48.1%. Okay, now because I'm smart, and I know that these two numbers are both made up of the same thing, and I know this is 48%, how much does this one have to be?
No.
52, 50,
No, it's 51.
51.9. Thank you, very good.
52.
About 52. Okay,
I'm still doing trade.
okay, whew, we're halfway done. Woohoo! Halfway.
Halfway.
Because guess what? We haven't done all of our expenses. Have we calculated how much things are eating into our profits?
Can I
No,
just
not
take
yet.
that paper and cheat off of it?
Not yet. Not yet. Okay, so now we've got to do our expenses category. Okay, we're going to go over each of our expenses, and we're going to do them in alphabetical order.
Oh,
So advertising first.
Advertising first. Very good. That's our first expense.
And then bail note for jail.
Bail money for jail, I don't think is on the list.
Probably.
But we're going to do our advertising expense. Do you want to write all the categories first, and then do all the numbers?
Yes.
Okay, let's do that.
Wait,
So we're gonna do-
advertisement expense not even on here.
It is.
It is.
Wait,
I just looked at it for the second.
Shut up.
Why I added
Shut
it.
up. I was in the, was in.
Okay, you guys start writing this down. You guys remember what the depreciation expense
What are you
is?
gonna miss about being silent?
It's for the equipment that was used or became worn out, so it's worth less now. Insurance expense is for the insurance we have used. Okay, do you guys have any questions about what some of these accounts are? Okay, cash short and over is for when you have money in a teller, like in a cash register. And if the till is short or over money, meaning you gave out too much or you didn't give out enough change from when people give you cash, that's how you get your cash short and over. Or if you have a petty cash fund and you have employees who you've given them cash to go run errands for you, maybe to buy supplies or whatever, you've given them, say, $100 and they have a little fund, and then when they spend it, they had to fill out, remember when we do those little petty cash reports? And then we had, at the very bottom of that, we had a cash short and over. That was to show whether the person had managed that money that we gave them appropriately and used it for the correct accounts. So remember on that sheet, it showed what kinds of things they purchased and what accounts they would go into. So that cash short and over becomes an expense. So if if you give your employee $100 and they walk back with nothing and they don't have any receipts to prove where it went, that becomes an expense to you. Because I just can't make the employee pay for it. Sometimes they do. Some companies will have a policy that if you mismanage your funds, then you pay for it out of your salary.
You have a lot of expenses.
Yeah, there's a lot of expenses. There are a lot of things that eat up into your business. Okay, I'm gonna start writing the numbers in the third column. They go in the same column that we've started all the other columns. What did you The federal income tax is an expense we will do last, because we want to know our taxes before that tax and after it.
Wait, so do you get all all taxes from the income statement?
I'm writing them from the income statement, yes, so they're all right here. They're all listed right here, but we're skipping the federal income tax payable for now, and all the other, sorry, I was looking at the wrong thing. We're skipping this federal income tax expense for now. We'll get to that.
Reduce the font size to 14 point. Type prepared for, enter twice. Type the name of the person who the report is prepared for, so Mr. Daly. Type the name of the person of the class.
What is the biggest expense on this report? Yeah, what is that for? Salary. So what is your most important? Have you ever heard that phrase, people are a business's best asset? The employees are our most important asset? That's because they are also the company's greatest expense. When you are paying out a lot of money, you really want to be sure you're paying it out for something, you're getting your money's worth, right? So that is why a lot of companies spend a lot of time worrying about hiring. Because it's going to be a big portion of where their profits end up going. It's on how well they chose their employees. Okay. When I've listed all my expenses, I'm going to obviously get my total expense, but where am I going to put that number for my total expense? In the fourth column. Very good, Lydia. What number did you guys get? Oh,
We were still writing these.
okay. I'm going to start adding mine.
We should keep that myself.
Start over. Or you can also use the clear button. The CE button will clear the last one you did.
No,
For
I'm
paper.
talking on my paper.
Oh, I have some whiteout on the back table if you want to go get some whiteout. That's not right. I made too many mistakes.
Let me show you what it looks like.
Got one every 84,000. Everybody did.
Is that what you got?
It was the last part.
That's what you got?
Yeah.
Perfect, Sarah got it. Okay, let's put it in this fourth column. Okay, what do we do with the numbers that go in the fourth column?
We use it back.
We have to figure out the percentage of net sales. So I'm going to take that number while it's in my calculator, divide it by our net sales. I got 33.9%. Is that what you guys got? Yeah?
0.33.
No, 33.9.
That's what-
The number in my calculator, is that a percentage? Is it? No, it's not. It's in decimal format. How do I get it into a percentage? Move it to the right 2 times. Times by 100, however you want to do it. Exactly. Okay, 33.9 is our percentage. The next thing we want to know is our net income before the federal income tax. How are we going to find that number?
Add them all together.
We have our gross profit on the sales, right here. And now we just figured out our total expenses. Do I want to add my total expenses to my gross profit or subtract it from my gross profit to figure out my total income? Subtract, very good. Okay, so I'm gonna take $262,275.68 subtracted by $184,764.54. I'm going to put that number right underneath, $77,511.14. Is that what you guys got?
Yep.
Okay, what percentage of this number is our net sales? We don't know.
I got 66.
As the percentage?
Yeah.
That's not what I'm going to get.
I just subtracted.
I'm not, no. Did you take this number and subtract by this number to get this number?
Yeah.
Okay, then to find this number, I'm going to take the top number, my net sales divided by my net income before federal income tax, to tell me my percentage of net sales, right? This is the last one.
Yeah.
They don't all equal 100. That's the trick of it. These two all equal 100 because they're both directly related to that net sales. Our expenses don't equal that 100%, and neither does the net. It's a percentage of the net sales, not the division of how the money was spent. Does that make sense? It's not like we're taking the pie and cutting it up and seeing, okay, we paid this much in taxes and this much and this and this much. That's not what this is. This is just giving you a range or something to compare it to. Because every year, is this number going to be the same every year, how much you sold? No, it's going to be different from year to year. But if you did a percentage every year, you could look at the percentage and see if it was the same as last year or better or worse, right? So from year to year, you could compare the percentage of net sales and see over time if you were improving. That's the whole point of this. Okay, now we're going to less our federal income tax expense. What was that number?
A number?
21.
It was $14,603.
Thank you.
No, I mean-
Thank you. You are right. We're going to subtract $14,603.79. Do I want to add or subtract these last two numbers? I'm going to add my income, my federal income tax expense. I have my net income here before federal income tax expense. Now I'm going to subtract my federal income tax expense. And it is going to tell me my net income after federal income tax.
This is the hardest thing I've ever done.
It's challenging. It is. It's challenging. You've got to be ready to memorize some steps. Okay. Is that the number you guys got? Yeah? No? Okay. We're going to skip for a second to our...
No.
Well, did you get this number when you did the math yourself? $62,970 or $7.35. Is that what you got? Okay. Okay. We're gonna skip for now the on your own just for a second and go to this work together on 15-2. We're gonna compare a few, these are some measurements, the earnings per share, the price earnings ratio, the cost of your merchandise sold. You're gonna compare these to know if the company is doing well. So I'm gonna turn to page
Wait, can I see the chart again?
Yeah.
460. No, not 460. Yes.
Chart. Can we see the chart again?
Sorry, I thought I was showing you the chart again. What time is it, guys?
2:12.
Okay, we have some time. We're gonna, everybody get to this point. Is everybody here? How many of you are here with me already? Yeah? Nod your head if you're here already.
Sorry, we're starting to call.
I know, the chart's a little hard and I had a hard time the first time. I did not do it this perfectly the first time. In fact, if you want to see the one I really worked on, like how many whiteouts stuff I had to do the first time I did it. So I made some messes the first time. It's okay, you'll get it.
Less federal income tax.
Less the federal income tax expense,
You have to.
net income after federal income tax.
How do you not see it? It's right there. Once you choose the revenue. You gotta wait.
Okay, are you guys ready? We're waiting on you, hurry, stop talking.
He missed the line. Perfect. Problem.
What's the last number?
Okay.
Is it 35 or 75?
It's 35 right here. Okay, so on our spreadsheet, look at what we're doing. We took our net sales plus our cost of merchandise sold was equal to our gross profit on sales. Sorry, other way around. Our net sales minus our cost of merchandise sold was our gross profit. Then our gross profit minus our expenses became our net income before the federal income tax. Then we subtracted the federal income tax to get our final net income after the federal income tax expense. Does that make sense to you guys? That is the equation you need to know. This part is what you need to know the most. Because if you know this, you can figure out which purchases and stuff you need to know, right? And you got to memorize these account numbers in order. So we'll get to that in a second. First I want to give you some analysis tools. So we're going to read here in the book, it's asking us on page 460. It says, the interstate tires determines that no more than 53 cents or 53% of each sales dollar should be devoted to the cost of merchandise sold. So we're going to compare the actual component percentage of the cost of merchandise sold to the acceptable percentage last year. We're going to indicate if it was correct or not. So we look on our chart here. Where was our cost of merchandise sold percentage of sales? What number was that? What percentage of our sales was the cost of merchandise sold, guys?
Wait. No, wait. 48.
The cost of merchandise sold, what was the percentage of net sales? 51.9. Okay, I'm going to take 51.9, I'm going to write it right here. Yes, 51.9%. Is that an acceptable result when we're not supposed to do more than 53%? Is that acceptable?
Yes.
Yes,
Oh.
because it's less than 53%, right? So do we need to make a recommendation if it's acceptable? No, so we'll just write none. Keep doing what you're doing, right? This is what a manager does when they look at these accounts. Okay, gross profit on sales. Where's our gross profit on sales? What's that percentage?
That's the 48.1.
Okay, 48.1. It's supposed to be no less than 70.
So yes.
So is it no less than 47%?
No. No. Which number's bigger, 47 or 48?
Okay, but look at what it's saying, no less
No less.
than 47%.
It's
Is
not
this
less
number
than
greater than 47%?
Yes.
Yes. Okay, so do we need to make a recommendation? No.
This is no
Okay,
less.
let's pretend for a second that I had a component that was, say, my expenses. And it asked me, what is, and let's pretend for a second that I had spent too much in my expense category, and it did not compare to last year's amount. What recommendations could I make to lower my expenses? What recommendations could I make that would lower my expenses? We could stop spending more than we earn, right? So what categories could we cut out? I would say maybe move to a smaller or cheaper location, or maybe fire ineffective employees, or maybe, where else can we cut expenses? Maybe buy less supplies or buy cheaper supplies, right? So we can think of recommendations that would help these percentages. Okay. Now on the earnings per share, we need to read the book some more. It says the acceptable auto parts industry standards. Oh, sorry. I'm reading number 3 here in the book. Interstate. I already did number 3. I just skipped because I just filled out the chart. Okay, number 3. Interstate Tires currently has 110,000 shares outstanding with a market price of $13.75 per share. So we're going to calculate the earnings per share and the earnings price ratios. So the net income after federal income tax, what was that number? The net income after.
62. Wait, what's that? 75.
Okay, so I got my net income after tax. I had 110,000 shares outstanding, and my market price per share from the book was $13.75. So I took this number of shares and I put it in this box, and I took the market price per share and put it in this box. Okay, now we're going to do some math. We're going to do some ratios. So to figure out my earnings per share, I'm going to take my net income after federal taxes,
And do I have 1,000?
and I'm going to divide it by how many shares I had.
11,000.
110,000. That gives me an earning per share of 57 cents.
Wow.
I'm not looking for a percentage on this one. I'm looking for how much money, so I don't need to convert it to a percentage, right? It's just 57 cents. Okay. On my price per earnings ratio, I'm going to take my market price per share and put that 57 cents in as my earnings per share, because we just figured out the earnings per share, right? Then I'm going to divide the two and see the ratio between them.
Got 24.12.
And 24.1% is my price per earnings ratio. This ratio always wants to be around 20%. The higher the percentage, then the more earnings the company gives out. If it's a really low, then the company's earnings and the price are not very high. So we want to look at this indicator. This is a good way to compare between companies for purchasing stocks, right? You'd want a company that has a better price per earnings ratio because you want a cheap price and a lot of earnings when you're investing in companies, right? So this is how you would compare. So as a company, we want to be sure that that ratio is really good because then people will invest in us. Okay, I'm going to give you guys the rest of the time. You can do one or two things. Oh man, 4 minutes. I'm sorry. You guys can work on your own, on your balance sheet, on your income statement, or you can do this part. Well, you can't really do this part until you do the balance statement.
How about we just do
Or what I would recommend is thinking about how you're going to memorize these items for the test.
Yeah, that's how it works.
You could write them all down on the back of the sheet. Exactly. If you wanted to, you could write them all down on your notes sheet on the very back, which is what I said. If you just write down all the sheets and you know where they go in the sheets, that's fine. Just figure out some study techniques. I do want you to use the next 4 minutes productively though.
Productively?
Productively.
Okay, let's look up some.
I know it was a lot to take in today. So over the weekend, you guys are gonna keep reading, read up and try to find the answers. If you guys all come with, hey, are you listening? If you all come with the notes on this part answered, I will go through these answers with you on the front page, which will help you on the true, false, and the multiple choice. This is your notes. You get credit for doing your notes already. Oh, yeah, do your notes over the weekend, and I will go through it with you and make sure that you all have the right understanding, okay?
Got it.
Check.
Ah, you jerk, why'd you push enter?
That one.
Over here.
Sorry.
Oh, it's okay. You want to get the chapter 14 test? 13.
Oh, you're going to retake that test. Okay. Okay, you're taking this test. Did I give this already to you? Or did you already start it?
No, I didn't start it.
Okay. Okay.
So is it pretty much the same thing?
Pretty much the same thing.
Okay. Cool.
I'm happy with the results from the last test, guys, so I need you to hold on to these, and I don't want you to share them with anyone until everyone else has taken it.
Oh my god. Did I do words?
You
Oh
can-
my gosh.
Remember that you can come in and retake this test.
What'd you get? I'm not telling you. I'm not telling you.
If you have not taken this, if you are not going to get the test back from me, that means I need you to stay after today and take this test, or sometime soon.
Wait, you don't want to take
Can we,
After this score, I'm not telling you.
can we retake it?
No, you have taken it 4 times. You have had your 2 chances on
There's
it.
not.